currently based in Melbourne, Australia. His dad was a builder, so growing up, Shayne was around a lot of building sites. And for a while, he wanted to do what his father did. And that's what most kids want to do. At one point, he even wanted to be a school teacher. But as we all know, he ended up as a banker. How did that happen? Well, the financial world owes it all to his high school teacher. She said, "No, you are going into commerce." She had all the plans laid out for him, and as the saying goes, the rest is history. So let's meet this almost builder, almost school teacher. He's featured in the first of a series of 6 episodes across today, covering the opinions of global banks and technology companies on how the financial services sector will respond in 2021. This segment will start with a fireside chat moderated by CNBC's Koulouris, together with Shayne Elliott, Chief Executive Officer of ANZ Bank. So what role will financial services play in the current economic recovery efforts? How will digital transformation drive banking? Let's find out by going over to Koulouris, who is ready with Shayne.
Been having in terms of COVID-19 and the path forward into 2021. Now, Shayne, over at the ANZ, you had a rather controversial, as it so happens, stance when it did come to your own investment choices and your own planning for the next 10 years, next 30 years when it comes to climate change. What do you think that not only your bank, but other financial services, other banks need to be doing to address climate change and taking this opportunity because of the COVID-19 pandemic to actually start actioning for 2021 and beyond?
Well, thanks, Will. And look, I think it is an opportunity. And, what do banks do for a living? Our job is to allocate capital, debt capital, across the economy. And, we do so, certainly at ANZ, through 2 lenses. One is through our purpose. And the purpose of ANZ is to shape a world where people and communities thrive, and we're here for the long term. And the second, obviously, is an economic one. And we want to find ways where there's an intersect. And, we think that financing the transition is absolutely right at the heart of that intersect. And, it's not a moral crusade. It is all about seeing the transition, what's happening with our customers, what the community wants, and our ability to really put their deposits and their capital to work in a really positive way. The opportunity in sustainable finance is absolutely massive. There's literally going to be trillions of dollars spent around the world in the transition. I can't think of a bigger opportunity, and ANZ wants to be right at the forefront of that, and that takes some leadership, and we have to give the right signals to our customers and the community, and that's what our new policy announcement was about.
Do you think there's any risk involved, perhaps, though, in terms of the fact that you might have stranded assets that can't find financing in the jobs that aren't created, or do you think that's counteracted by the fact that all of this new investment into more environmentally sustainable things?
No, there is a risk. And if you're talking about certainly at a economy level or community level, that is a risk. And that is the role of government and of business to make sure that we look after those who are impacted negatively by these. And there are real transition plans, alternative employment, alternative skills training, alternative usage of parts of the country that will be impacted by this more than others. So, I think, and that's really important that we get a sort of a government industry compact to say, okay, we need this transition. How do we look after those that are impacted and make sure that they can thrive and do well out of this as well?
Now, we've seen a huge impact across the globe when it does come to COVID-19, and it's basically been a set of circumstances where whoever's managed containment the best is seeing the fastest recovery moving forward. Now, how are you looking at the situation, say, for example, in Asia, in the US and in the EU as a kind of comparative analysis, and where do you think that goes forward into 2021?
Well, what we've learned through this, and just to remind people watching this, ANZ, we're in 33 countries, so we're pretty much across the world, mostly in Asia Pacific. And you're right, we've seen varied approaches to this and various sort of impacts, some really devastating and some quite successful, like here in Australia and New Zealand. What's really coming through from the bank's perspective, though, is this is really testing the ultimate resilience and flexibility of economies and customers. And so, we've got customers who are in some pretty dreadful geographies in terms of, but who are doing very well because they themselves are resilient and they have shown an ability to flex their business models. And similarly, so I don't know that it's as simple as sort of, drawing lines around the world and saying these people have done badly and those people have done well. It's a pretty mixed bag. But as I said, I think that flexibility, agility, resilience is important.
Yeah.
In terms of what we've seen as well, we've seen M2 supply coming on at the highest levels pretty much ever. We've seen this situation where you have a lot of impact when it does come to the natural order of things, this false economy in a sense, and SMEs have really been, I suppose, the cornerstone of that kind of assessment, whether or not we are going to see a lot of insolvencies, not just here in Australia and New Zealand, but around the globe as some of this stimulus pairs off. Do you think what kind of an impact do you think that's going to have in the broader economy in 2021? Should we see this influx of SMEs failing all at once?
Yeah, look, and that's a really good question. And, so look, I've been around a long time and, banking is a series of sort of crises, actually. Some are bigger, some are smaller, some are global, some are local, but that's sort of what we do for a living. What we've seen throughout the world is that, there's sort of a playbook. And actually this one, from an economic perspective, is actually very, very different. And so normally these big crises sort of affect the big end of town, and we see large corporates failing, etc. Actually, in this case, it's not at all. In fact, there's very few large corporates that seem to be in stress. It's really at the SME space, as you rightly point out. Why? Well, many numbers of them were told they had to shut their businesses down overnight, and it was through no fault of their own. They hadn't done anything wrong. They haven't overgeared. They didn't have bad businesses. They were just shut down. There was sort of prohibition. And so that's going to cause all sorts of issues. And the question here is, how able are those businesses able to survive and get through this and able to restart? Now, we've got a couple of real benefits here that I think we've never seen before. One, and certainly in our lifetimes, we've never had a crisis at a time of kind of zero interest rates. So time is free. So giving customers more time to get back on their feet from a bank's perspective is almost free, as opposed to, time chipping away, charging interest. So that's one huge benefit that I think we underestimated. And secondly, to your point about money supply, this huge wall of money that has been thrown at the problem, the system was already liquid. And then we've had this massive central bank intervention and governments who, through grants and tax breaks and all sorts of things, putting money. Just to give you a stat, which I think is really interesting and instructive, here in Australia, about 20% of small businesses asked for a loan deferral, which the banks readily gave. Of those, in ANZ's case, if we look at those that and look at their cash balances, the ones that asked for a deferral, 2/3 of them had more money in their bank account at the end of the deferral than they did at the beginning. So that tells you, despite them reaching out for help, they may not have had a lot of revenue, but they've had a lot of support, and that cash has actually supported them. So they're actually in a really good shape to be able to kick off again. So look, I think it's still a long way to go before we see. We think the hard times are going to come probably in the second quarter of next year, particularly in the southern hemisphere as we sort of get through the summer.
But also by that token, you've also got, they're pretty much beholden to also what we're seeing on the bigger end of town when it does come to businesses, because they're obviously tied to them in terms of doing business with these larger corporations. And there's been a lot of struggle, I suppose, around the world from the monetary side, from the fiscal side, to try and get businesses to start investing again. Yep. How are other banks going to be able to manage that, to actually get them to perhaps ignore some of the uncertainty and just buy into the economic recovery?
Well, I don't know if they'll ever ignore uncertainty. I mean, it's one thing that businesses dislike most of all. I mean, is uncertainty, right? So businesses in many ways can deal with almost any scenario as long as there's some degree of confidence about the rules of the game and how things are going to be. They'll work to it. And I think capital sort of abhors that uncertainty in many ways. So I don't know that we can do a lot about that. I think that does come down a lot to government policy and giving some sort of clarity in terms of roadmaps. The reality is, though, Will, that banks, and not just ANZ, I'm sure globally, stand ready and able to support the recovery. What I mean by ready and able is we are flush with liquidity. Yeah, that liquidity burns a hole in our pocket. There's out of self-interest we want to deploy it. We want to get out and lend those deposits to businesses, to people who have good business models. As I mentioned, most of the businesses, nearly all of them, who've got themselves into difficulty here, it was through no fault of their own. They're not bad people. They weren't overgeared. They didn't have a bad business model. You know, these people were actually very competent and were running really good businesses. And it's just a little bit of getting back on your feet. I think the idea of investment, though, my personal view is that's going to take quite a bit of time for people to be confident enough. And the reason is, hey, we're all a bit hopeful this week because we're hearing about vaccines are starting to be deployed and, there's a little bit of optimism there. But what have we learned over the last 6, 9, 12 months is that we've learned that things change really fast. And, 1 minute things look good and then literally something bad happens and, people are worried. So I think it'll take quite a bit of time, a bit of stability. Let's get those vaccines out. Let's just see that things can go before people are really going to start deploying investment dollars.
And it's interesting that you do mention things happening quickly and the rules of the game being changed, because we've seen this altered dynamic when it does come to the geopolitical side of things, particularly in Asia. We've seen all of the tensions with Australia and China, the US and China, and I suppose this sort of mindset that now is the time to pivot to the ex-China countries when it comes to Asia. Is that what you think needs to happen, or is China still a market that people should feel confident engaging in?
No, China is still a very, very important market and part of our world. I mean, it's still the major trading, certainly from where we sit in Australia and New Zealand, our major trading partner, as it is for many across Asia. I don't imagine that will change. I imagine that, like everything, COVID and the recent issues, or the sort of the media coverage of those issues, will pause a lot of companies and say, hey, we need to think about diversification and, how do we make sure we mitigate some of this risk? I have not spoken to any customer who wants to, move away from China or reduce their interaction with China. But, when they're thinking about growing, I think it is opening their eyes. Well, maybe I need to give more thought to Vietnam. Maybe I need to think more about India. Maybe I need to think more about Japan and Southeast Asia. So I think, again, it's just a bit of a wake-up call to say, hey, I need to be broader in my perspectives. But I don't think it's a matter of walking away from China. I don't see that at all. I think there's a lot of optimism about, getting that relationship back on a sensible footing.
In terms of sensibility, the last time we spoke, it was prior to the presidential election. We've now seen that Joe Biden is the presidential candidate and the person that will be leading the United States into 2021. How much of an impact do you think this has, not only on the financial sector, but also the ability of business to do business in the Indo-Pacific region and I suppose across the world as well, with the changing mindset of this kind of presidency?
Look, I think from a business perspective, and again, I'm speaking from an ANZ perspective in our customer base, which is very heavily invested in trade and capital flow and freedom of movement. That's sort of what we do for a living in many ways. And the economies in which we have large positions, like Singapore, like Australia and New Zealand, are outward-looking, open, liberal sort of economies. So I would say any regime which sees a move back towards sort of, globalism and sort of more sort of unitary approach to or multilateral approach to trade, et cetera, is a good thing. Do I think things change massively overnight on January 20th? No. I mean, I think the issues that are being surfaced globally at the moment run deeper than just, Trump versus Biden. But I think, the trend certainly, I think, will be a lot friendlier. And, we welcome that.
Okay, I want to calm things down a little bit in our discussion, Shayne. In terms of this COVID-19 impact that we've seen work and the way people work has altered drastically. Now, a lot of us are working from home. I know you have quite considerably. I am currently right now. Do you think that this is a phenomena that's just going to recede into 2021? Or do you think now, or are you planning on engaging in a total rethink of how you structure your organization in order to allow people to perhaps work from home, have that flexibility, have that mobility?
No, I think it's going to be a big shift. I don't think we'll start, like at ANZ, even across the 33 countries, we've had 95% of people who can work at home working from home. So we have branches and that where we can't do that. But we have had up to that peak. We've been very fortunate. We've been able to open our offices in Auckland and Wellington and in Sydney and Brisbane, et cetera. And what we've seen there is a return to work, but we're still at sort of, now partly it's still under some levels of control, but we've really got back to sort of, 30 to 50% occupancy. Our view, and we've done a lot of work researching with our people and asking what they would like and also what we would like. Our view is that we think we'll get back to about 3/4 occupancy on any given day. And so what we're seeing is I've learned. I mean, I've never worked a day in my life at home until this, right? I never wanted to. It never occurred to me. And now I've sort of learned that actually you can do it. And in some ways it's even more efficient, not every day. And so I think we've just opened our eyes to it. Now, what it brings along with it is a whole lot of cultural issues and leadership issues. Leading a team remotely is a lot different. You can't rely on the same old signals that you used to have. How do you recognize people who are going above and beyond in terms of their work? How do you bring people into your company and share the culture? How do you coach people? All of those sorts of things. I don't think they're insolvable at all, but they're going to present some new leadership challenges. So we talk about a blended workforce. So we were very flexible in when you worked at ANZ, part-time, full-time, early starts, late starts, and now we're going to be flexible on the other axis, which is where. And I think it's a good thing.
Does it, because it is a financial sector, does it open up the prospect of risk as well? Because I would imagine that a lot of the infrastructure in your business would require it to be extremely secure, and then having all of these work from home sort of satellite offices in a sense would create further risk?
Yeah, it does. But it's interesting. So I use an analogy, and maybe it's not a good one, but it'd be appropriate for today's audience. We've gone from a mainframe to a distributed network in terms of work. We used to, if you think about head offices, big buildings with thousands of people, it's like a mainframe. And now at ANZ, we've got 40,000 offices because I've got 40,000 people sitting at home. So we've gone to a distributed network. That doesn't mean that the network is insecure. It just means the security you need to put in place is different. So, the tools we give our people, the way we do things has changed. And, I'm really proud of the fact that we've been able to do that really, really quickly with no incidents. But yes, you're right. It will start us to think differently. The risks of that distributed network are just different than they would be in a head office world. But, I'm very, very confident that we can operate, and we've shown that we have been able to do that.
Now, Shayne, I do think that we're slowly running out of time. I just wanted to touch on the digital side of the fintech space. We've seen this explosion when it does come to a lot of the online shopping. Consumer behaviour has completely altered throughout COVID-19. And one, I suppose, sector in particular within that, a subsector, has been buy now, pay later. Now, all of your competitors here in Australia, for the most part, have taken on that part of the industry, but ANZ's chosen to pull back a little bit. What's the rationale behind that?
Well, I think it has a place in the world, so we're not wishing them any harm. We're not clear on what problem it's solving for our customers. And, so we sort of think about our purpose in terms of what we're trying to achieve. And, we want to help people save for and buy their own home. Well, buy now, pay later doesn't really help you do that. And we want to help people start and run a small business or move goods and capital around the region. So we just stand back and say, hey, there's lots of things you can do. There are lots of things that you might make a buck at doing. Doesn't mean we should. And to be perfectly honest, we've really struggled to fit it into that sense of purpose. We already have enough credit. If people want to borrow money, there's more than enough ways of doing that than figuring out a new way. A little bit concerned about some of the demographics and some of the data points that come out of it. There were some recent studies here in Australia that showed quite a significant number of people had to go without necessities, had to go without necessities in order to meet their buy now, pay later obligations. I'm not sure that we feel so great about that. Now, look, I'm not saying we're perfect. We've got credit cards and other products, legacy products that we have. So I'd rather just double down on the things that we're doing and leave that to others.
Now we're right at the end of our allotted time. Just finally, I'm not a fan of listicles, but in terms of 2021, let's do a little bit of a SWOT analysis. What's your biggest opportunity for the financial sector in 2021 and your biggest threat?
Oh, the biggest, well, it's the same thing, actually, Paul. What we've seen is we have seen, and, if we put a positive spin, so all, sympathy and regret for the dreadful situation that COVID has caused. And, I don't mean to be dismissive, but to put that aside, what we've seen is a massive shift in consumer and corporate behaviour. And, as humans, we should sit there and think, boy, has it reminded us how resilient and flexible and adaptive and innovative people really are. So quickly has the world adapted to this new world. And what we're seeing in our world of banking is that people's behaviours have changed overnight. Less branches, less cash, more plastic, more digital. Our opportunity is to embrace that change because people now have all these new needs. How do I work from home? How do I shop from home? How do I do things remotely? And we have amazing ability to enable all of that. And that's exactly what banking's about. That's a massive opportunity for us at ANZ, and we're really excited about it. Now, we had a whole bunch of things that we could do digitally that we had on our backlog. We just rushed them forward and said, we've got to get this done because now we have a consumer world who's hungry for it. And I don't think there'll be no going back. And so I think that's really, really exciting. How do we transform the whole idea of banking into this digital world? And Singapore is a huge leader in this, and we like to think Australia and New Zealand are pretty close behind. And then what's the biggest threat? Well, the threat is that somebody else gets there first, because speed is everything in this game. And we were first to launch Apple Pay in Australia. We've been first to launch all the mobile wallets. We're now getting some really good skills in place and functionality that says ANZ can be a leader. But as I said, I don't take that for granted. We've got a lot of work to do. I think 2021 is going to be another very unusual year. I just finish on this. Banks like us have never been in a stronger position. We've got more capital than ever. We've got more liquidity than ever. At ANZ, we've got a management team that's more experienced than ever. And we've actually got the capacity to deal with COVID because it's going to be tough. There are going to be businesses that fail. And we've got the capacity to invest at levels we've never invested before to see that transformation in the community and in the economy and to enable that. And that's actually pretty exciting, but certainly not without risk.
Shayne, Elliott, thank you so very much for your time. Always a pleasure having discussions with you. And thank you to everybody that's been watching here at the Singapore FinTech Festival for this fireside chat with ANZ CEO Shayne Elliott. Back to you guys.
Thanks very much for that, Will. It's very informative fireside chat on how the bank is changing according to the new realities of the post-pandemic world. That was ANZ Bank's Shayne Elliott in a discussion moderated by Will Koulouris. Thanks very much for that once more, Will. Do apologize for the earlier interruption. These are some of the harsh realities of many things going virtual since the COVID-19 pandemic. Now, this same topic of discussion will also feature prominently in a discussion among some of the world's most well-known finance leaders. So that's coming up later this morning. Do stay tuned for that.